Is it fair to say that this is kind of a tit for tat responding to what China has done?
Yeah, I would say this is just an additional step in a long process that's been going on for at least the last 2 years now. I mean, scrutiny over variable interest entities, and that's what we're talking about here. These are shell companies that are set up in the Cayman Islands so that when you invest in a firm like Alibaba, you're actually investing in the shell company down in the Cayman as opposed to what's in China. And so this scrutiny has been going on for the last year or so. It's increasing, and certainly with this statement this morning, it's just raising the stakes all just to another level.
All right, Tom, talk to us about raising the stakes over in China as well. You're now based in London, but you were based in Asia for quite a long time. What did you make of the moves that China's doing to crack down on technology companies? Like, how much more juice is there for that?
Well, we've seen a lot more action just in the last 24 hours. And importantly, we had the Politburo, so the 25 most senior members of the Communist Party, meeting this week and putting out a statement. One of the key lines that came out of the statement was this, that they want to tighten supervision of overseas listings. And the Politburo meeting that happens in July traditionally looks ahead to the second half and outlines priorities. So we should assume that upping that scrutiny, further scrutiny of those overseas listings, will remain a priority for the second half, and that officials in Beijing will continue to flesh that out. We already know, of course, that they've banned the use of VIEs, at least for the education sector, education companies. We had the details out over the weekend. We also know, of course, that officials have put in, or at least a proposal that would mean that any company that was looking to list in the US would have to go through a cybersecurity review that many analysts say would anyway, within itself, just alone, would reduce significantly the numbers of IPOs that we've seen in the US. But just in terms of the context, they've already raised, Chinese companies so far to date, about $16 billion US, but the taps are being tightened very quickly.
Tom, what about companies that have already IPO'd in the U.S.? Of course, there's been all the drama around Didi. Will they go private? Won't they? I mean, are we going to see more increased scrutiny of companies that are already there?
Well, certainly, and just tying in to what was being discussed just a minute ago, the dispute between the US and China over access to auditors' reports on the books of Chinese companies. And, of course, there is now a law in place in the US to ensure that that happens within 3 years. Well, Beijing has not agreed to that, so that remains an uncertainty. You have already, of course, had some notable Chinese companies setting up secondary listings in Hong Kong and domestically as well. There was a key rationale for that, which was to act as a hedge, and it seems to make a lot of sense in the current environment. So more double or dual listings in Hong Kong is something we could certainly expect to see. China and officials there arguably would say, look, we put in place measures to make capital raising on the domestic market and in Hong Kong easier. Why not look to Hong Kong and the Starboard in Shanghai, for example, as an alternate venue?
Hey, Nathan, I know you're the policy guy, but if I'm a U.S. investor looking at how to invest in China, I'm getting a little freaked out as to what the government continues to do in that perspective. What's next? Like, what else can they do?
So, this review, Chairman Gensler said this morning he's instructing staff to look at transparency and disclosures. Now, this transparency disclosures, the review is going to take time. It could be up to a year, if not a little bit longer, for the SEC to come back. So, in terms of new IPOs coming into the United States, it's just there's probably not going to be a lot happening there. So this tit for tat between the U.S. and China, and Tom mentioned the legislation that requires auditors to file paperwork with what's known as the PCAOB, that's not going away. And so over the next 3 years, you're going to see this intense scrutiny unless there's really somebody were to, I don't want to say step down or at least alleviate the tensions. This is a situation that investors are going to have to live with for the next few years.
Yikes. Nathan, how much of this pressure on the SEC is coming out of Capitol Hill?
So I think it's agreed pressure in the way that both Republicans and Democrats are somewhat on board with this. The legislation that we're talking about, it passed, with bipartisan support. Being seen tough on China is good politics, especially as we head into an election year. The one thing I would say, though, is that this legislation, like Tom mentioned, is over 3 years. And so that's a lot of time for something to pull back or for somebody to, calm the waters, if you will. And so this certainly doesn't have to be the outcome that we would see. But, I certainly think for at least the next 6 to 12 months, you're going to see this heightened scrutiny and heightened tension.